welcome to the Capital Discussions Roundtable. I'm Tom Nunnermaker with Dave Thomas. We'll talk about the M3 today, but before we do, a quick disclaimer: the Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options could be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And just a reminder, this is for educational purposes only. So with that out of the way, Dave, nice to have you on the roundtable. I know we've known each other a long time, but I think
yes, we have.
I think the first time you've actually been on the roundtable. So welcome, and I'm sure everybody will enjoy your presentation. There's a lot of M3 enthusiasts in our Capital Discussions community.
Well, good. No, I'm happy to come on, and had a chance to, as typical what I do with a lot of my trades is, after I go through, I do a trade debrief, which is, in preparing for the presentation today, was actually just it was the perfect way to kind of get prepared. Because it's what we kind of teach with all of our students and such, is to do these trade debriefs after a trade, and it really gives you a nice perspective about how you did for the trade, if you followed the rules and guidelines that you have, and kind of gives you a good idea of what you could have done differently. So in preparing for this, that's it was fairly easy because I just kind of went through my standard trade debrief, and here we are. So hopefully people will find that, try to share as much as possible and tell people at least some of the rationale of why I'm doing some things and not doing things. And, hopefully if we have time, we've got other things that we could be talking about, but we'll kind of hit this May M3 trade. And at least I'll try to explain to folks, some of the things weren't exactly done to I guess guidelines, but I'll make sure that I note those as we go along.
And Dave, just for people who don't know you, maybe just a minute or two about who you are, and I know you're working with John as a mentor.
Yeah, no, okay, great. Thanks, Tom. Well, actually, the options world to me was totally brand new back in 2008. And believe it or not, Tom is actually the guy, the first person that I ever talked to when he was with Dan Sheridan, and so I had a friend of mine that had kind of introduced me to options, a neighbor of mine, and a good friend, and he basically gave me 25 books on options trading, and so I diligently went through and read all those, and then that kind of started me off with trying to figure out what this crazy world of options trading is. And I did a little bit of research online and saw the thing about Dan Sheridan. And so I decided to, of course, took advantage of all the free things that are out there and checked all that stuff out, but then said, well, if I want to be serious about this and I wanted to look at it as a, kind of a second career, let me check this out. So Tom was the point person and got me signed up. And soon after that, this was kind of an interesting time because that was like July of 2008, kind of right on the precipice of having some very interesting things happening with the market for sure. We were all in the whole financial system here in the U.S. was in tough situation. And about 6 months later, I ended up with doing mentoring, and that was with Dan Harvey, who was one of the folks that kind of one of the guest mentors that Dan Sheridan had within his group. And so I was extremely fortunate that the timing was just perfect, and Dan and I became very good friends, and continued mentoring with him, and did that for about 6 months, and then ended up at a reunion in Chicago that they've been having all the time, and which was really fantastic, and got to meet Dan Harvey there and Dan Sheridan, and but also ran into this guy John Locke, who was actually doing a presentation there. So that's where John and I first met. I continued for a few years just kind of going along and doing some, trying to find my way, and then eventually teamed up, or actually John became my mentor So as I call it, I went from, kind of my undergraduate education and continued on with further continuing education with him, and which, basically led me down the path of, I think, really understanding options to a different level. And I'm very fortunate now that about a year ago, John asked me to come on board to help teach. So I've been doing that for just a little bit over a year now for newer students coming in in John's Locke In Your Success group. And that's just been a tremendous amount of fun for me personally. And as a matter of fact, there's one of my first students is actually coming on tomorrow as kind of his successful trader of the month for May. And he's only known options for a year, and he's a full-time pilot, and he's just doing fantastic. So it really goes to show that if you really put your mind to it, you can really do these things and make it into a business for yourself. And as a matter of fact, not to promote, but in about a month we'll be in Hawaii doing a kind of that again, with doing all kinds of learning and continuing our education, both from a business side, a system side, and also a psychology side with John Locke. And so I'm very excited to do that. And of course, we'll be doing some business, but hopefully we'll have some fun too. So we're very much looking forward to that.
Who's the pilot, by the way? I'm always interested in other pilots.
Yeah, he's not as exciting as that, Tom, but he's a full-time UPS pilot.
Okay, well, some of my old Air Force pilot friends went to fly with UPS, so it's a good deal. So
yeah, and it's
I'm going to show your screen, Dave. It's just I think Control-Alt-D, like desktop on a Windows PC, or you just go to the Quick Start. There you go.
Okay, did it work?
It did. I see. Thanks for using WebEx. Okay.
All right. Well, let me share my option view here. The gentleman's name is Travis Wood, and he's actually doing a presentation tomorrow morning just to tell about on John Locke's site about how he's had success over the past year. And he started last April with zero knowledge of options. I mean, totally absolute green. Started, and he was actually my first student, and he just took it really well. When he had to go fly and get his flights, he would have to sometimes fly from Kentucky to LA to just get on the airplane to get hooked up with his flight, and so he would spend the time on the plane back testing. So he was able to advance very, very quickly. And anyway, people that are interested can hear more about that. But I guess it's a testament to and basically the only thing he's trading is M3s. So it's a great learning tool. I've been training it for many years now, and we continually both as people probably know, two of my kids also are traders, both full-time traders. And everybody trades the M3 system, and we have evolved the system over the years, as John Locke has always told people, to try to customize it to whatever your different risk tolerance levels or the way that you like to trade it. And people have customized it and probably come up with many different names for very similar kind of things, but that's the way it is. And I think that's very encouraging I think it's good for people to do that, because when they take it on and be able to customize it to their own individual type of personality, it really helps, get really entrenched in the trade, and people really start to understand it and own it. So it's a passion for me. It's a passion for me to every day to come in and be able to keep learning, because I can, as I tell people, I've got different outlets for people to be able to take advantage of that, and whether it be through in this case my family, my kids, my older brother. He's retired, but also is he does trading in his retirement years, and so it's and it goes right down to people having full-time jobs and doing this all day. So it's a pretty versatile trade, and I guess if there's no questions to start off, Tom, if that's enough, I can kind of get into the trade here and kind of get people started here.
Yeah, why don't we get going on the trade?
All right, very good. Well, today is actually a very, very interesting day because if you go back, today is May 18th, and in about 20 minutes from now, so it's incredibly timely, there's an FOMC meeting or meeting minutes being released. And the interesting thing is 2 months ago, I noticed that this was going to be happening on March 16th. So as it turned out, I had just got off of my prior month trade, and it was time for me to put on a new trade. And so here I was, March 15th, which I always kind of remember that because it's my birthday. And so here we were, and I was ready to get into a trade. And one of the things I kind of pass on to people was, and I mentioned this, but with data points on this are very, very small in number, but and I don't predict what's going to be happening in the next 20 minutes from now for sure. But what I saw 2 months ago was that the day before the meeting minutes, the market happened to be going down. The volatilities were going up. And effectively what I would say is that, the prices of the options and the total combination price between the butterflies and the long calls, I would say was at a much lower price than even just prior days. So what I ended up doing was going through, and what I'm going to show here is that even though this is going to be showing a May trade, you could have been going into an April trade here, which had 31 days to go till expiration. And here's the May trade here, which has 66 days till expiration. The normal M3 trade, as everyone has heard, is usually starts at 56 days. But there's nothing magical about 56. So what I did is I took a look at this situation, and I put trades in, and I modeled it, putting it in April, and I also modeled it and put it in May. Given the fact of where the market had been and what was, since the January 1st, we had this tremendous down spike and then this big recovery. I made a personal decision to say, I just felt a little more comfortable giving myself a little bit more time, and the graph looked a little bit more amenable to market movement. So I ended up deciding to not do April and go into May. Now, I know many people that did April and did absolutely fine with their trades, and there's nothing to say that there's anything wrong with that. But my decision was going into May, and that's what I'm going to be showing here. So here we are on Tuesday, March 15th. It was time to get in. As you can see here, the market was down about 13 points. And just so you know, this 11 o'clock, this is West Coast time. So this is exactly, 2 hours before market close. So since the market was going down, what I ended up doing was I started to get in. And what I'm going to show here is excuse me, sorry about that. The numbers here are going to show a little bit different as far as quantity, and I'll explain that to you in a second. The trade that I'm showing here is not the standard 10 lot. This is actually going to turn out to be, as we would call, a 60 lot. Now, so the standard would be a 10-20-10 butterfly, normally 20 to 30 points below the money. And as you see this one here, we're trading at 1040. I'm sorry, the butterfly here is at, the shorts are at 1040. We're trading at 1069.80, which is, 20, almost 20, almost 30 points below the money. So this is where I decided to jump in. When you will see, as usual, when you put these things on, you will, you'll normally be kind of alternating between depending upon your risk tolerances and what the market is doing, you usually be putting on, a 10 lot and then a long call and then another 10 lot and another long call to make sure that you don't have, or you're limiting what your risk is. In this particular one, what I'm showing here is just, we won't spend a lot of time on that, but it was more of just showing you the market was going down. I put the butterfly on, and then very quickly thereafter, I put the long calls on. Now, as you could see, when we started off, we were fairly high negative delta, but that was just because of not having the long calls on yet. After putting the long calls on, the normal delta that you'd be looking at for a 10 lot is usually between 0 and -10. So that's kind of the standard. In this particular case, as you notice, by the time that I had actually put this trade on and got the long calls on, which was only, I think it took 6 minutes between the first entry and all of these being filled, the market had already shot down about 4 points. And the delta had actually gone from just slightly negative to actually now just slightly positive. So here it's a positive 72. So, people might ask, well, that's a little bit, I thought you're supposed to start with negative delta. Well, that is true, and I did, except the fact that, as soon as it happened, the market moved. And it, since the position is a little bit larger, it accumulates that delta fairly quickly. Now, a question may come up from folks saying, well, why did you, if this is a 60 lot, why do you have 74 on here? And that would be a good question. And in this particular case, because of volatility the way it is, I had to add more butterflies onto this to be able to get the delta to be what it would be when I first started, to be about 0 and -10. Or in this case, to be able to do it, like I said, if I would have had only a 60 lot here, this would be a much, much higher positive number. So when you start, you would take a look and see what it looks like, and here's what the trade looks like. It's a very good starting position. It's a relatively flat curve, and now I'm not sure if a lot of people know this with option view, but they've just put this little feature in here down here, this little button which will snap the T+0 line to where the little black dot is, which is basically where you are right now. So if you click it, you can see it actually comes down, and this will be interesting to see how this works out over time, to see what people see as the benefit of this. But this is just a brand new thing that Option View came out with, so just to show you that in case people didn't know about that yet. And so here we are basically on Tuesday, March 15th. And one of the other big things that I want to tell folks about, and especially because of the day before the FOMC meeting, volatilities were high. And so one of the things with this particular trade, since as you can see, it's a high negative Vega trade, volatility does have an effect, especially right at the beginning of the trade, because delta is very small, gamma is very small, theta is very small at the very beginning, but Vega is quite large. So any movement in volatility to start is actually can affect the position significantly right at the very start. The interesting thing that happened, and this is what I wanted to share with folks, is that when the actual trade started, when you actually go through, and I'll actually just go and I'll flip through to the next day, Wednesday, March 16th is basically like today. In other words, this is the day that the actual meeting minutes got released. And the interesting thing that happened is that the market didn't move a tremendous amount, but as you can see, I went from about a negative $1,500 to about a positive $1,600. And there was very, very little market movement, but the only difference was of volatility. So that was a, kind of a nice thing to do. So, because of that, for the same reason, I don't know if it's going to come true this day or not, but, I ended up, buying some, July positions yesterday, thinking that, similar things could happen. Like I said, I don't have a lot of data points upon that happening. We'll see, but I just figured I'd throw that out there for folks to, for if anything, something to kind of think about and look as time goes on. So,
hey Dave, somebody was asking if they could see the calls on the matrix.
Oh, sure. Yeah, they're off over here.
Great.
So, okay. So what I'm going to do here to try to speed up the presentation so we can try to get in as much as possible, I went through and basically if there was the typical things that for especially new folks starting off here, there's typical things that you would look for as far as delta and Vega. And the typical things would be, in this case, since we have 6 long calls on, so I would call this a 6 lot, or if you could think about it as butterflies, it's a 60 lot. as we know, we have 74. So this is, a little bit bigger, but that's just because of volatility. So this would normally be a 6 lot, a 10 lot would be a $50,000 planned position. So a 6 lot is 6 times larger. So this would be basically a $300,000 position. But because I trade this more capital efficient, this trade is probably almost half that capital. So I trade this at close to only about $180,000 capital, or I should say risk. What you get and what your various brokerage will create as your margin will depend upon what kind of if you have portfolio margin or just Reg T margin. But I'm looking at this as strictly just Reg T margin and total risk. And so when you would look at the actual chart here, which because I have the weekly call, this does this kind of funny curve. But if you go through here and just change this so we can all see it, as you can see here at expiration, this trade is only about this is a $100,000 maximum risk trade at this point. So it's not 180, it's not 300, it's 100. So just wanted to show people that because that's the true total risk of the trade is right here. That's on the downside, obviously. So that's the basic setup. And now it's basically just looking at the typical delta and vega. We don't like the position to turn vega positive. So actually, I'll just go back here for a second. So the normal thing is on the downside, our normal adjustment is at 50 positive delta. So that would be for a 10 lot. But since this is a 60 lot or 6 times, so very simple, 50 times 6 is 300. So I would just move the little green dot down here till it would reach a delta of about 300, which would be right about here. So that would be the typical first adjustment point, okay, per those rules. And so that would be at 1009 approximately. As we know, if we were to shoot down very quickly, that would probably mean that we would probably more up in this area around here, just because the way that the graphs are showed in option view. Now on the upside, the only thing to look at is basically when our vega turns positive. As you can see down the bottom of the little green box here, that's right about here at about 1119. So basically those are the only two things that we're looking at. If we get up to 1119, or if our delta gets over minus 300 up in this area up here, or if it gets higher than about 450, kind of in this area right in here near the kind of the edge of the triangle, and otherwise it'd be about minus 600 in this main body of the triangle. So those are the only things that we look at. Those are the very, very basic guidelines, and we're just going to kind of keep to that for this trade. So with those things, we can easily go, and basically from March 16th, there is absolutely nothing to do. None of those get close, except for when we get up to, and I'll skip to March 29th. So I'm going to move the clock along here to March 29th. And this little button over here will ignore the trade for today. See, I still have these calls over here. And then here's the main trade right here. Oops, sorry. Just put it in the center here for people to see. And so basically what happened here is, if you take a look at the trade, and I apologize for this, but this is an option view thing. Let me just change this around. This happens when you have weekly options in along with monthlies. What happened basically up here is that we, on March 29th, we were basically getting right to the point of the delta was still fine, because the delta was only about 100, which is still under our limit. But the problem is that, but when this was actually, it doesn't show it exactly right here, but my vega basically turned positive. So, so what I did is that I just did a very simple adjustment, and I basically just took some of these shorts here and just rolled them up a little bit to get rid of the delta. That, in this case, it's showing negative, but sometimes, this thing is a little off. So I'll just show you the actual adjustment. And I just rolled up 50 shorts up one strike. So it basically turned Vega quite negative, and basically put us in a position like this, which again, I have to do this. Now, this was I'll say an okay kind of an adjustment, because it's got us out of trouble. But because we were at still 52 days, having the positive Vega down here wasn't a huge deal. Running a little bit positive delta here is okay, although we'd like to keep that negative. But for right now, the graph looked fine, and that was fine. And see, one of the other things that we look at is that if you take a look at your long puts here, they're at 1090, where if we look at the difference between 1090 and where we're trading at right now at 1107, it's about 17 or 18 points currently. Normally, anywhere between 10 and 20 points above the long strikes is typically when this kind of a move does not work anymore, and you would have to actually just roll the entire position up. But in this particular case, because we're so far away, 52 days, I decided to put a little bit more time and just roll up some of the shorts. And actually, I believe the following day we also went up a little bit as well. As soon as, just a few more points. And actually what I ended up doing was just taking, again, it was Vega was getting, with these, Vega was getting very low, and I just decided to increase that negative Vega. And by doing that, I just rolled some more of these shorts from here up one strike to make it look like this. So basically we had, now it's, well, actually it's a condor. So now we've got a flat 74 on each strike. We increased here our negative Vega. We're running a little positive delta, which is a little unusual, but as you can see by the graph, we're still in fine position. Well, sorry about this thing in option view. It'd be nice if they corrected that. But here's what it looks like. Now, you could have very easily have made a decision at this point to go and just roll the entire thing up. But one of the things is that since we're so far away from expiration at 51 days, it was still fine. P&L was just kind of hanging in there, and so there wasn't a big reason to do it at this point. But we wait one more day, and at this point we pop up a little bit more, and now it's finally the time where it's time to do something. I believe now we're basically, if you take a look at these longs, I'm sorry. Here it is before the adjustment. You take a look at these longs at 1090, and now we're basically 26, almost 26 and a half points past our longs. We still have a little bit of negative Vega, but now our delta is getting quite positive, and it's really time to do something. And if you take a look the way it looks prior to that, and again, I apologize for option view here for doing these things, is basically this is getting a little bit more of a kind of a directional feel to this trade, and it's time to actually go and move this whole thing up. So we take a look, and we actually go, and by this little button over here, you can see we just raised everything up to, when we raised it, or we rolled it from our 1040s up to 1080. And also to correct the delta, we rolled some of the 1080s up to 1090 here. So basically just rolled everything up 40 points. And as you can see from here, now our delta is nicely negative. We've got better theta now, and also we've got very nice Vega. And here's what the position, again, looks like. And so now we're sitting just inside the tent, so we're not sitting way out here anymore, or in that case, we were 26 points past our longs. So here we are, we're sitting inside, and now we're just in perfect position. So from here, there was, again, now that we've kind of restarted things, there was really nothing to do until, I'm going to slip here to April 13th. And this was, let's see what happens here. So here now we're up, we're up here a little bit of money. We've got our delta is minus 348, and which is, as we look on the graph, we are outside of the tent here, just so that people understand where this is. We're just outside the tent. We're at 348, and that's actually a little bit beyond our 300 limit. So typical case was we would just go and roll up some shorts, just very typical, nothing very strange. And we just went right here and we just moved up some of those shorts. You can kind of see from before and now after. You can see some of the shorts moving from 1080 to 1090, and I believe a few up to 1100. There it is. And typically, especially in the beginning stages, what I tend to do is I tend to leave my whatever where my main shorts were here. I tend to not go below half. So or basically the same number of the longs. So 74, and I know I will not go and move more of these. I'll just now continually just keep on moving up the shorts, kind of in a caterpillar fashion, just right up the line here, if need be. So this just corrects our delta a little bit, gets it below. It was minus. No, it's only minus 63. Theta's in fine position, gamma's very low, and we got good negative vega, and we're sitting in good position here. So let's move along to the 18th. And again, we're still just checking for those same parameters. Nothing strange, nothing different. And so now let's see what's happening here. Let's check our graph. So we're outside of the tent, okay, and we're not that far up from our longs, okay, and we've got a delta of minus 223, vega minus 884. And let's see, so what we're looking here, I believe just because of the way that the graph was looking, I wanted to be able to go and just roll up a few more shorts. And let's see, was this? Okay, so I just rolled up a few more of the 1090s up to 1100. So you can see there were 40, and now there was, I basically rolled 20 up. And that basically just puts us in a nicer position and to be able to flatten out the graph. And sometimes what I also do is when I look at this, even though so we're up, a little bit of money here now, and what I'll tend to look is how much range there is. One of the other things I always do is look after any of these adjustments and saying that, if 20 to 30 points in either direction is not going to put me into a P&L situation that I think is good, then I would want to make sure I have an adjustment, even though the delta number isn't exactly what it is. And that's a kind of a personal thing that I do, and I learned that through back testing, that if you get a 20, 30 point gap overnight, you don't want to be down $2,000 or $3,000 for a 10 lot, because it's for this particular trade, it's a fairly, as you can tell from the T-bill zero line, you're always trying to keep it relatively flat, especially compared to other types of trades. And you want to be able to do that. And if you go down and you're that much, if you lose that much money in your P&L, it's tough to come back from. And that's not a good place to be. So let's see here. So basically, this is pretty simple. From here, we're going up to the next day, the 19th. It was just the market, as you know, was just relentless. It just kept on going up and up and up, and just kind of grinding its way up. And basically, what I kept on doing here was, as you can see, I moved another 10 of the 1090s up to 1100. Okay, I'm not going to go back to the graph because it just takes so much time to go look at that graph, but just to let people know is that, we just wanted to take it from a delta position here and just reduce it just a little bit. So we just rolled up a few more shorts, and it was basically just to kind of flatten out the curves a bit. So let's go to the 22nd here. Okay. So again, this was also a trade which involved a few other things. Basically, I rolled up some shorts, but also what I did is one of the things that we sometimes do for to help with our risk and margin is if you just roll up some of your lower longs here, or the lower puts, you can actually help with that. But then you would have to adjust some things with delta up here. So what I actually did, as you can see, I moved up some of these lower longs to help with as we're getting into the trade, because now we're only 28 days till expiration. The risk was increasing, so I just raised some of those up. But in doing that, I needed to do raise some shorts up as well to kind of compensate for a higher negative delta. So what this looks like is now like this. Okay. So it's just, now we're sitting outside here, which is also not a great thing, but you can see the market has been relentless. We readjusted, we rolled up 40 points, which put us right about in here, but now we're already up here. So, the market has just been relentless, as we all have lived through for the past few months. Just FYI, I was able to move my calls up into the May, so now everything is here. So now at least we don't have the problem with the graph now. So at least we can check a little bit easier now. So that was that, and then we just moved to the 26th, and basically it's again, market just keeps on moving forward, and here we are. We've got positive delta. We've got very little negative vega, and let's see where we are. We're way out here. Okay, so as you can see, we're from our longs at 11:30. We're 18, almost 19 points past our longs. So effectively, it's basically time to do another roll because we don't have enough negative delta, which is all going away here, to counteract our vega. So we really can't correct it anymore. So we basically have to go and reconstruct this whole trade and move it all up. So basically, I'm going to have to roll up from here, 1080. I'm going to have to roll up 30 points and then move up the shorts appropriately to correct the delta, which would then look like this. What I also did here, as you note, is that I actually, because we've been moving up and up and up, I finally decided to just scale the trade back to a 60 lot, and basically that helped with some of the excess negative delta as well. So was able to do that, and now just put it into a trade that looks just like this. So if you think about it, back on March 31st, where we had to roll up from 1040 to 1080, now here we are on April 26th, 26 days later, and we're having to do the whole thing up. So we're first time rolled up 40 points, now we're rolling up 30 points. So the market is just crazy here, but we're still hanging in there. As you can see, we're in perfect position here. We're still up a little bit of money, and I guess we're ready to move on from here and still go with the trade. So we're going to fast forward through a few days here, April 29th, and that will be, I think, about 21 days till expiration. And then we take and basically what I did here is we were getting to the point of, now we're, look what's happening on this side. So here we are feeling good about ourselves, and because we kept on going up, and lo and behold, here we go. Now we're starting on the downtrend. So because of our delta being over 300, we have to do something. In this particular case, I just did a simple adjustment, and I just rolled these 1140s back to 1130, just a simple vertical, just to address the delta a little bit. Well, actually, sorry. No, I apologize. We actually did a roll here. we actually rolled down the position 20 points. Sorry about that. I just had to actually refer to my notes here, which would have told me that. So we're over the positive delta limit, so we actually rolled down 20 points. So we're over 300, and so we rolled basically these 1110, and we actually rolled it back to 1090, which if I click the button, here we are. So we just rolled it back to 1090. We put the shorts up here to correct the delta to be appropriate, and let's take a look at what this looks like. So we just moved it from, remember, we were here, and now we just moved it back into here, into our kind of typical comfortable position. So we have good room in both directions, so we're not taking any, well, we're taking risk, always risk, but we're putting ourselves in a much better position to for risk in both directions. So here we go. We got 21 days left to go, and now we can go to May 2nd, and do some of the typical things that we do. And in this particular case, we went up, and our delta now is going in the other direction. Here we are outside of our tent, so it's a little bit above our 300 delta. So we just corrected that a little bit, rolled a few shorts up, and got ourselves under 300. And you don't have to go back to delta neutral. It's just, just correcting it, to, sometimes half or between half and three quarters, or I should say between a half of an adjustment or a quarter of adjustment. And that's totally a trader decision, okay? And so that was that. That was that move. Now we can go to May 5th. And so here we were up at 1138, and now I believe we're going to be heading down to 1111. So here we are from the graph. We're now we're rolling down here. Okay, so we just keep going back and forth, which is actually good for the trade, because as you can see, we keep increasing in our profitability. But of course, here it is. It's we're over 300, and I believe in this case, let me just double check here. It's 1090. So in this case, I just did a partial adjustment here. I didn't completely roll down. I just rolled down some of the shorts, which just corrected the delta just a little bit. And I call that, good enough for this particular, this particular move to make it look like this. So one of the things that I know that John always talks about is, imagine if you weren't up in profitability on this trade right here. We would call this kind of sitting on top of the ball. Not a great place to be, in the sense that, movement in either direction from here, you're just, you're going to be losing in either direction. In this particular case, since we're up, good, decent money at this point, we have the ability to make a decision to say, are we comfortable with 20 to 30 points in either direction of where we're going to be, and are we okay with that decision? So that's a trader decision that you have to make yourself. Some people could look at this and just say, well, what could you do? Well, I could just take my money and run. One of the cautions that I'd say is that, if you should do whatever your trade plan says. So if your trade plan says, I'm going to make, $1,000 per 10 lot or $2,000 per 10 lot, and here I am with a 6 lot or 60 lot on, and that would be $12,000. Well, fine. Then if you met your trade and you met your plan, then fine. There's nothing wrong with taking the trade off. If you have a higher number that you have as far as your trade plan, then you need to do what you need to do to stay in the trade and go from there. So in this particular case, we wanted to stay in because we weren't at our profit target, and so from 15 days left to go, we basically went from May 5th to May 9th, and let's just fast forward here. Whoops. So we were at 1111, and we were at $13,000 profit at this point. So in just a few days going into the trade, we went up 10 points in the trade, but we almost, well, I guess even a little bit more, doubled what the profitability is with the trade, and right at this point right here. So what I did is that on May 9th, with 11 days left to go and the market looking like this, okay, so we were just been going back and forth, but money really came into the trade. Again, you'd have to take a look and say, okay, what's your trade plan? And so what I was looking for was approximately about my scheduled thing here was about 30,000. So I wasn't there yet. But what I decided to do is, since we were in good position here, and there's nothing wrong with also taking some money off the table and lessening your risk while you're there. And we're getting closer and closer to expiration, because this is Monday, May 9th. and I usually don't go into expiration week, so I know I got to get this trade off by Friday. So what I did is I started to look at this, and I just started basically scaling back some of the position here. So you can see right here, I'm still in at 60, 60, 60, and 60. And you can see from my adjustment here, I significantly reduced the position. And what I also did was I got rid of the long calls. So what the trade looks like now is like this. And I believe John has a term that he uses that he kind of coined. And I know there's various people that have probably had this, but he's kind of, as he says, locking down your trade. In other words, on the upside, we took our, if you take a look at, let me just do this. Let me go to existing. Sorry. Let's see. So this is existing. So this is where I was, okay? And this is where I'm going to. And I just want to superimpose it so I can show you the difference. So here are the two trades. So as you can see, I took my risk from the original trade, which was all the way down here. Now I brought that risk all the way above zero. So the worst I can do on the upside is, right around, 16,000 or 17,000 if the market goes up here and just settles. On the downside, as you can see, the blue line is now where I'm going to. So it's a little bit worse on the downside than if I hadn't done this. But because we're still nicely under the tent, I've taken off all my risk to the upside. We just have to kind of worry about it going too much to the downside. But as each day goes on during this week, I'll look for it to kind of just hang in here and maybe have to do some adjustments. But that's what I'm looking for it to do. So here we are now, and here's the adjustment. And you can see, from the matrix here, I've skinny down the position. The position now, from a total risk standpoint, is only at about 100,000. Okay, so I'm sorry, 110,000. So I've reduced the risk down here from about 180 down to 110, and taken the money off the table, reduced the scope of the trade, and basically, as opposed to just waiting to the very, very end and then taking off the entire position, this is a method of being able to, and as a matter of fact, I remember Dan Harvey telling me this years ago, if you get a gift and all of a sudden the market has done something good for you, it's not a gift until you take it. So in this particular case, I'm never afraid to be able to go in, and even though I wasn't exactly at my profit target of 30K, it doesn't matter. Point is that it was close enough because remember, it's a target, and I'm also have a few days left. I've got about 4 days left to trade. So there's still time in the trade to, maybe to make a few more bucks. So what I did here is that I went through and said, okay, let's wait and let's go through 2 days. And basically nothing had to be done on Tuesday. And then on Wednesday I started here, and now the position had gone up above my profit target. So basically I went and further reduced and changed the position to this. And this was kind of an interesting one. And we'll spend a minute or two on this one. And I'm just going to refer to my notes here a little bit because I just don't want to forget things to tell you guys. So I wanted to further reduce risk in the trade. So what are the decision points that you can do is either get out or you can wait and restructure the trade. And how do you do this? In this particular trade, what I did here, if you take a look at what this is here, I rolled my lower longs, these guys right here, up about 40 points. I rolled the upper longs here down 10 points, okay? But what I also did is at 1070 here, I actually purchased more puts. And what I did is I rolled some of these 1110s up to 1120. So when you take a look at all of that and what it did, the Greeks look like this, okay, which are looking fine, 116, Delta, Vega, that's all fine. You can see Theta now has reduced a lot. but I'm also over my profit target. And what this looks like is this. Okay, so let me just kind of back this out. So you could say, well, this looks kind of interesting. You know, how have I changed my profile? Well, what I wanted to do is those extra longs that I put on the downside helps me from any kind of a move to the, if the market was to move down. If the market was to move up, I'm sitting up here. And so I'm just waiting, and I'm just adjusting this. And as if the market will tend to start to go up this way, I will start to reduce the delta in the trade to make sure that I don't let this thing go down too far. And if it starts going up here, you know, they'll probably be ready to, you know, take it off. So that's kind of a little interesting move there. And, you know, basically I want to make sure that risk in both directions I'm good with. And I know I'm not going to be in this position for too long. And if I take a look at, let's see, 512, I don't think really too much happens here. And it's just still sitting here like this, which is fine. And I'm just basically waiting and saying, okay, you know, I'm just monitoring this thing. And, you know, how often will I be monitoring this thing at this point? Because I know I'm getting out on Friday, you know, basically basically this week, you know, every couple of hours I'm taking a look at this, because I don't want to lose what I've got. I've taken a lot of the money out of the trade. I've reduced the risk. And now I'm just kind of monitoring it every few hours, make sure it's okay, make sure it's still within limits. And then basically I look at on Friday, May 13th, and basically I ended up taking the trade off, I believe, right at about 12:44 here, as you can see in the T-log. Took it off at around 1:15 or about 15 minutes before closing. And this is what it looked like, you know, just prior to that. I mean, talk about being right in the middle, and said, okay, guys, well, this is it. And I just waited, and it was in good position. And then I just went in and quickly closed out these trades. And, you know, at the end of the trade, and remember, this was a model trade. This is the way it is per guidelines. This was not my trade. I did not trade it, but this was one I wanted to show you. But if you take a look at how this actually would have turned out in the report section, the trade comes off. And I believe it actually goes to, as soon as this thing does it, if you look at, let's see. Oh, okay, so if I take a look at reports, here it is. Basically, it's right about 35,000, which was, you know, just a little bit above the profit target. And if you take a look at the actual, I believe I saw a question just coming through to take a look at the T-log. I can show you that to you guys. There's the T-log, and you can look at this on the recording and look at all the various parts of it. There's the first page, second page, and the last page. So that's the complete T-log. So, Tom, any questions?
Well, there were quite a few. I didn't want to interrupt you, so if you can maybe take a look at them in the chat. Let's see, where could we start? See, they talked about moving the date in the future to get your expiration analyzed chart looking right. Let's see what else. Okay, so Randy asked, why did you use the April week 5 calls instead of May?
Oh, the weekly long calls? Right. Yeah, the reason for doing that was basically just very simple. It costs less. They're probably, you know, half price. So I just you know, as opposed to you can actually end up trading more, and if you have a an account, which the account that I do trade one of these in is, kind of limited in funds. So I have to be very careful of the amount that I have. And if you used a monthly versus a weekly, you're constantly having to do more adjustments because of your margin, based upon being able to do trades within your brokerage. But by being able to use that weekly, it's, it costs less, and it frees up money to trade. So it's pretty, it's kind of cool.
Okay, Rocky asked, rolling everything up seems like a really big bang adjustment. How do you do it and minimize slippage?
Well, that's a really great question. But it would, with the amount of time that we have, it really would be it'd be hard to go through that in the proper detail. But one of the things that I had done for John Locke is on thing there, that is, I had actually come up with a little Excel spreadsheet, and actually came up with a little thing on his website that we had that was talking specifically about that, about how to manage risk and how to be able to go and roll positions, and how to do it quite, elegantly using, Excel spreadsheet and just kind of laying it out. So I'd say I could kind of refer him to that. And that's something that I presented on there, a few months ago. I mean, there's the, I call it the Fred Flintstone approach, where you can go in with a big hammer and literally just take all your positions off, and then be able to go and then just re-put on new positions. But then there's usually a lot of extra commissions. But there are ways in which you can actually change, very neatly be able to go and take your positions either through a combination of verticals, butterflies, condors, and just roll things up. I think John Locke can do this in his head, which I can't do. But so that's why I use a little spreadsheet to kind of help me.
Okay, John Bailey asks, are you trying to maintain within 180,000 for this on a Reg T basis?
Yes.
Okay, and then he also asked, what was the planned capital limit for the trade?
My planned capital for the trade, which was, the normal planned capital would be, it's $50,000 for each 10 lot. So in this particular case, it was a 60 lot, or 6 times the 50,000, or 300,000. But because I couldn't trade that, I went more capital efficient, and that's how I got it down to about $180,000.
Okay. See, Rudy asks, how do you get separate orders to roll up? Not sure exactly what he's asking.
How do you get separate orders to roll up?
Yeah, was a question. I'm not sure. Maybe you can clarify that, Rudy. And he asked if he could show the T-log. Is that maybe something you could send me and I could attach to the recording, Dave?
Well, I just actually did do it. I just put the T-log up there, and I went through all the different pages.
Okay, great.
Yeah, and if, for instance, if this particular trade, just for people, if there was a time where I was actually, I may have, when I went through this, if I didn't make some corrections to correct the capital, I apologize, but there may have been situations where I may have forgot to go back and actually check the capital. And if so, I apologize up front. If this actually was a larger trade within, like getting up more towards 300K, but the intent was to keep it at 180. And like I said, there were times that I showed you in the trade where I actually went through and made adjustments to make sure of that. There could have been times where, like I said, I may have just not checked. And if that is the case, I would have just done a normal, capital efficient type move to correct that. And that would have been just, as I showed you, like just rolling up some of the longs and adjusting some of the shorts. So it's a pretty simple thing to do.
Right. And then what commission rate are you using? I know there's like $2,000 of commissions in there.
Oh, yeah, that's at 75 cents for a contract.
Okay.
And no ticket charge.
Pretty good rate.
But yeah, thank goodness for I did that before TD Ameritrade took over.
I don't think they'll do that now.
I kind of, yeah, I mean, although I'll be honest, I know people that have, a friend of mine who went in and started an account, and he had never traded before, and he called up and, he got I think a buck to start, which
Oh,
took me the longest time to try to get that. So I still don't know how how TD makes their decisions. That's kind of like the secret sauce.
right.
Because usually
we're
they
trying to work we're trying to work a group discount for capital discussions. I know somebody there, so still haven't heard back, but we're working on it.
Yeah, I'd say, I remember when we started off with Dan, it was $1.50.
Yeah, and then it was $1.25. I don't know where it ended up, but yeah, at 75 cents is a pretty good rate.
Yeah, and I know people that have 50 cents.
Yep, I think Jim has 50 cents on the SDX.
Yeah, well, that's what I'm saying, and so yeah, I mean, I was fortunate to get that, when I got it, but that's the reality is, and I remember this was a comment that I remember from many people that I had listened to, and over the course of my education and training, is that, and I truly 100% believe this, the commission, everyone worries about the commission rate that they see there. The reality is that the slippage, and when you go in and out of positions, and your ability to be able to make good trades while you are doing your trades, I think will far surpass any kind of a reduction that you'll get in the rate and commissions. Your ability to, commissions turn out to be, just a very small piece of the equation, but in your actual execution of your trades, I feel, and I 100%, because I know, many of the folks that, we all listen to, they will say that, you can actually do a lot better by getting a good execution on a trade and doing that really well. And that will take care of any kind of, you can take care of the commissions very quickly.
Absolutely. Zune asked a couple questions. So what's your normal days to entry for your, I guess for your entry, your days to expiration? And then what do you use for exit conditions or maybe profit targets?
Yeah, good question. If I didn't say it up front, the normal time of this is 56 days till expiration for an M3, but you could trade this anywhere from 15 days till expiration and put on a trade, or you could trade it up to 70 or 80 or 90 days till expiration. So the trade ends up being, you have to back trade it, because the trade will operate a little bit differently, far away versus very close to expiration. But when we have very different also volatility conditions, that will change also how the trade looks and how it gets structured. But all of that, as I always mention to students, all of that is revealed when you go through back trading. When you go and test and make this trade and go through environments of, the last, 5-6 years, you can find pretty much every condition that you need to be able to find out how to handle this position. And the guy that is going to be on tomorrow morning, Travis, that's exactly what I recommended to him, and that's exactly what he did. He went back and back traded a lot, just like my son and my daughter. They went back and tested over probably 10 to 20 years, as a matter of fact, in different time slots to really understand this trade before they put any live money on at all. So it's, the learning is very critical, and it's the more that you do that, the more that you find that, this trade is actually it seems simple to start off with, but it's a fairly complex trade, of which the more you get into it, the more you find out how complex it is. But the more you look at it, the more, as I've seen over the years, also I've been able to raise my profitability level over the years just by learning more and more and more about what's kind of, as John would say, what's really under the hood in the trade. So if you really are a student of it, which I still am, I feel I'm just a student of this trade and a student of options trading. It makes me want to continually learn, and that's how I try to continually improve what I'm doing. I think his other question was what exit conditions, Tom?
Yeah, like your profit targets.
Yeah, profit targets on this trade. In John's system, he normally says 10% of the planned capital. So on a standard 10-lot trade, $50,000 planned capital, that'd be $5,000. So that's what is what John shows and is as part of the M3 course. Me personally, I've learned over the years that I have set a lower target for myself because I sometimes don't want to trade as far into the trade, getting into the expiration week. So because of that, typically I will accept a lesser of a profit target as what my personal target is. But I think over the years, like I was just mentioning, I think over the years, as you get more comfortable with the trade, you can go and, start off. And I think as you learn more and more and more, you can continually improve. And I believe you should be able to improve the profitability level as well.
Okay, and Andre asked, why don't you trade options on ES instead of on SPX or RUT? Have you looked at anything else besides Russell for the M3?
I personally have not. I'll be honest. Because John had created the system in the Russell, I wasn't really interested in going out and recreating the wheel. I wanted something that I knew was proven and tested, and that's what I ran with. At some point down the road, I think John said that if you were trading, if the quantities and the trades get up to some fairly large level, there may be time that I believe some of his students, are now trading this in the SPX, and they've created their own, rules and guidelines and all that kind of stuff. I have not personally seen that, but I know that some of the more experienced students and ones that were interested in trading, I think, significantly, very, very large accounts have ventured into the SPX, but I believe also, I don't think it's, Pandora's box. I believe that there's, as long as there's ability to get fills in the Russell, it works very well. But I think you can also trade this in the SPX, but you'd have to come up with, your own rules and guidelines and test it over time and, see how it works compared to the Russell. But I think you could trade it. I think you could trade it using a lot of different things. It's just a matter of going through and seeing if it will work.
Oh, it looks like John's here. Over 5 million shifts some into XPX. Okay.
What was he saying?
Oh, John's here. Hi, John. He said over 5 million shifts some of it into SPX with planned capital. Well,
there you go. So, I guess if you're at that level of trading, then there you go. You get your work cut out for you.
And Rudy asked, isn't trading broken wing butterfly more easy or easier than the M3?
Well, the reality is that, as you start the standard M3, it becomes, as you can see by my presentation, it becomes a broken wing, very, very quickly. Right. So it's and as a matter of fact, given whatever the volatility is, you may be starting off in a broken wing condition as well.
Well, I think that's it for the questions. I did paste the link in the chat. SMB was offering a little discount for if you get all of John's stuff. It's not a lot. It's $100, but every bit helps, and it expires tomorrow. So if people are interested in that, that's available for you. So use it if you want to. And other than that, Dave, thanks very much for presenting. Really interesting and lots of questions. So that's always a good sign that people really liked what you were talking about.
Well, good. Well, hopefully it was, like I said, it was normally when John goes and presents this in the actual program, he uses a smaller amount. Since this was something that we had, looked at a very recent time frame, so I thought it would be kind of fun for people that had recent knowledge of exactly what the market was doing over the past couple of months. I thought it would be interesting so people would have some fresh knowledge of kind of what was going on and seeing how a trade would work right directly in that environment. So that's why I chose to, when you asked me to come on a few months ago, Tom, I said, well, let's wait to the end of May, and hopefully the trade might be interesting for people to view, and it might be something because of people living through this maybe with other kinds of trades. Here's a way that they can kind of look to see how it corresponds to what the market was doing, and consider it if they're not doing it. Maybe have a consideration of that this might be something that might be interested, or something that maybe they'd be saying, this is the last thing I ever want to do in the world. So whatever works for people, that's fantastic.
Right. Okay, well, once again, thanks for coming on, Dave. I'm sure we'll have you back. And John, I know you're here, so maybe we can get you to come on too next time. So,
well, thanks for the
for sticking. Oh, yeah.
Thanks for the invitation, Tom. I really appreciate it. I'd love to do it.
Okay, well, as Itzhak Perlman said, anybody can play somewhere once, but when they invite you back a second time, then you've done something. So we'll definitely have you back. So.
I'll look forward to it.
Okay, great. Thanks, everyone. We'll see you later.
Bye-bye.